You are listening to Keystone's Stock Talk Podcast, episode 131. If this is your first time listening, then thanks for stopping by. This podcast is produced every week for your enjoyment, and show notes are found at www.keystocks.com. Come back often, and feel free to add the podcast to your favorite RSS feed or on iTunes. You can also follow us on Twitter at Keystocks and on Facebook or via our 24-hour streaming radio station, pennystocks.fm. And keep submitting your stocks via the usual social channels or at our website, keystocks.com, for our Your Stock Our Take segment. And we just might review your stock in an upcoming show and let you know if it is a buy, sell, or hold. To kick off 2021, we are doing a special 2021 predictions episode. Included are predictions on Bitcoin, gold, SPACs, the US and Canadian markets, cannabis stocks, government handouts, Facebook and Google, the pandemic, Tesla, and Brennan's case for and against debate, and much more. At the end, we tag on a question from a listener on Nuvo Pharmaceuticals, MRV on the TSX, which actually just changed its name to Miravo Healthcare. Miravo is a profitable Canadian healthcare company that targets areas including pain, allergy, and dermatology. We let you know how the company screens using our criteria. So let's get right into the show. Welcome to my co-host, Brennan and Aaron. How are your holidays?
Good. Yeah, they were great.
Great. They were great. How about yours?
Well, usually I'd say not long enough, but like you said, I think we were talking prior to the show here. We're usually out on the road a ton during the year, so it's nice to get back to family. But maybe we saw a lot of the family this year, so seeing even more of them.
I mean, certainly, yeah. Normally in any given year, even just during the holidays, you'd be out. I'd be taking a trip probably to the island to see some family. We'd be doing other things outside of the house. But, you know, being stuck with your family inside or just in the neighborhood for 2 weeks is great, of course, but don't mind a return to the routine.
Yeah, it was crazy. Last year, we were talking around the house here, and we had 35 people over here, and this year I think we had 5, which was basically our family and Candace's mom. So it was a very quiet Christmas holidays, but still enjoyable. Kids got what they needed, what they wanted, which was great. It was good to go through, and now we're back at it for the new year. So we'd like to start off this year with a couple of predictions from each of us and some associated discussions if we can get into those predictions. I figured I'd randomly draw out Aaron out of a hat. He can kick us off with one of his bold 2021 predictions, and by all means, explain it for us, because I'm sure we won't understand it if it's coming from your mouth. So let's start with your first prediction.
All right. Always very witty, Mr. Irvine.
Oh, yes.
Okay, so my first prediction is that there is a 90% chance that the U.S. market will outperform the Canadian market once again in 2021. I don't know if this is really a bold prediction. When we look at the historical data in the U.S., the U.S. market, the S&P 500, has outperformed the Canadian market in 9 out of the last 10 years. And over this period of time, it has outperformed the Canadian market on average by about 9% per year. So this does not include dividends. Last year, for example, the U.S. market up 16% compared to Canada, the TSX, up only 2% before dividends. This seems to be a systemic problem for the Canadian market over the last decade. And we've discussed this as well on our webcasts and with clients. Really what this comes down to is an issue with the structure of the Canadian stock market. So as we've talked about in the past, the Canadian stock market is highly overconcentrated on 2 sectors, one being resources, the second being financials. In the financial sector, 60% or more is just the big Canadian banks, the big 6 Canadian banks. But the problem with the Canadian market is not just where we are overconcentrated in those 2 sectors. It is more important to point out where we are underexposed, and that's in the area of technology. It really bounces around a lot, but the technology sector in Canada is one of the least important sectors, less than 10%, usually about the second to last or third to last out of 8 sectors. So somewhat unimportant, whereas if we look at the US, the technology sector is their most important sector, about 25% of the US market, the biggest sector by market cap. And that's really what is driving these superior returns in the US, and I believe that that is going to continue in 2021. So one of the things that we did in our last webinars is we looked at the US FANG stocks, the top 5 US tech companies. We had Amazon, we had Apple, Facebook, Microsoft, Alphabet, which owns Google. And together, these companies at the time when we did our last DIY, which was in the fall, I believe in October, they were up about 40% on average, whereas the rest of the S&P 500 or the US market overall was up at that time at about 5 or 6%. So technology is really driving this boom in the US. These companies are in areas like cloud computing, like artificial intelligence, like cybersecurity, really interesting growth opportunities through the pandemic and going forward. So I think this is going to continue. Of course, that doesn't mean we don't have great companies to invest in Canada. We absolutely do. But once again, Canadian investors also need to look south of the border for great diversification opportunities.
Yeah, I like how you broke down the juxtaposition, the Canadian and US market. We talk about that all the time in our seminars, and we're going to have some new ones kicking off to start this year. But I love how you talk about the juxtaposition to how the structural difference between the Canadian and US markets really has seen an outperformance in those markets. Of course, I do like how you're hedging your prediction at 90%. So there is a 10% chance that Canada may outperform, right? So we can get out of that one by saying there's a 10%.
I'm just basing that on the data over the past decade, because there was one year in the last 10 that Canada did outperform. That was 2016, 17.5% on the TSX compared to 9.5% on the S&P 500. 2016, I'm willing to bet a big part of that outperformance was the boom in cannabis stocks at the time, the only year in the last decade that we have outperformed. But very interesting is that in the 10 years before that, between 2001 to 2010, it was actually a reversal of the situation. The US market, the Canadian market rather, outperformed the US in 8 out of 10 years. So bit of a reversal over the last decade.
Yeah, well, and maybe if one of Brennan's predictions come true, his bold predictions come true, the resource sector does well this year. Perhaps Canada has a chance of outperforming. Do you want to talk about that prediction there?
Yeah, that's
Brennan?
a good segue right into my prediction.
Hey,
so
such a professional over here. I know how to turn those.
You sure
that
do.
is called a segue in the business.
You're
right.
So this is going to be sort of in relation to one of my other predictions that I make, but I'm just going to say that safe haven assets perform well in 2021, and that I believe metal and mining stocks will continue to have strength through 2021 because of the amount of money that governments around the world are injecting into their economies, which will push investors to seek out commodities as a hedge against inflation. So I don't have a big spiel like Aaron did to support my position. It's just a quick speculative bet or prediction that I'm placing. So yeah, that is.
And we'll hold you to it by the end of the year. We'll come back to these predictions, and if you're wrong,
Brendan,
we'll ridicule you.
Sorry, Ryan, I'll let you
finish. Yeah. Well, I said we'll ridicule him incessantly if he's wrong at the end of the year.
Or if he's right.
Of course, if Aaron's wrong, we won't even talk about it.
He doesn't have to be wrong for us to do that.
I'm just kidding.
Sorry, Brendan, so just to discuss that for just a second, you opened up by saying you think safe haven stocks are going to do well in 2021. So you're relating safe haven to like hard assets? Like what are your thoughts there?
Yeah, so I'm saying I guess any kind of commodity, or I guess
or safe haven
base
assets,
metals.
did you say?
Base metals, yeah. So base metals I think will perform well. Bitcoin, which I know we're going to get into a little bit later here, I think that's also going to perform well. So that's what I mean by safe haven assets. Hopefully, I'm using the term correctly.
Well, I think
I would say I would
what
consider
Aaron
the metals and the Bitcoin safe, probably the exact opposite. Although I do get what you're saying.
I do make that argument as well. So I'm with you there. But we'll get to that in a bit.
Okay, I don't want to take away all your smoke here, but okay, but yeah, in terms of you're thinking like hard assets like metals. Yeah, okay, I got you.
Yeah, in terms of the exploration side there, it couldn't be more volatile.
Yeah.
Sorry, I'm cutting you.
Yeah, well, I was just going to say that in an environment of heavy monetary stimulus with an expanding supply of money, short-term supply of money, I could absolutely see a scenario where hard assets
inflation
like metals,
creeping in hard assets.
So that's kind of the basis behind that prediction.
Yeah.
Excellent.
So let me make a bold prediction. We've talked about these assets, or this group, SPACs, before. I will define them in a second, but I'm going to say the SPAC market. They are. We're talking about the spandex market will heat up in 2021. That is because, of your purchases, right, over the holidays.
Sorry,
right?
yes,
and we already know.
Yeah, sorry, SPACs.
I'm kidding. Yes, SPACs, which the market will heat up in 2021, but at some point in 2021, the average SPAC share price will collapse. That's my prediction. So let's just say, what are SPACs for most of the audience out there? They are special purpose acquisition vehicles, also known as blank check companies. They are set up with no commercial operations, strictly to raise capital through an IPO or initial public offering for the purpose of acquiring an existing company. SPACs have been around since the 1980s. And in recent years, they've gone mainstream, attracting big name underwriters, investors, and raised a record amount of money in IPO money in 2019, only to be smashing that record in 2020. We saw many SPACs go to the market, shell companies with no businesses in hopes of they could find the next big winner in 2020. Popular SPACs this past year: DraftKings, Skills, CII Merger, Virgin Galactic, Social Capital is one of the popular, not over the past year, but it's been there for a while. Perishing Square is another SPAC. Now, just to give you an idea of how much money, the massive increase of money that went into SPACs over the past year. Well, in 2013, SPACs raised about $1 billion, $1 billion in the US. 2014, $2 billion. 2015, it was 4. Then 2016, it was back to 3. 2017 was a jump to 11 billion, and then 2018 was 9 billion. And the record in 2019 was 13 billion. So it went from 13 billion in 2019. Last year, it went to 70 billion was raised through SPACs. So a massive jump up. Now, Bespoke Investment Group recently talked about the exuberance for SPACs. They published one statistic, which is kind of shows a feeding frenzy here in this segment. Of the 287 SPACs that have come to the market just in the last 2 years, so a shorter term time horizon, just 6 are down more than 10% from their IPO price. In contrast, 15 SPACs have more than doubled from their IPO price. Now, in other words, more than twice as many SPACs are up 100% as they are down 10%. Now, that's a sign of exuberance at this point. What I would say is, what we have to look at here, there's nothing special about the SPAC structure that should make a company that goes public via a SPAC a better or special investment unto itself. But the returns of late have been special. I don't believe that is sustainable. So why have we seen so many SPACs? We could look at that. Their popularity ties in part to higher U.S. regulation via Sarbanes-Oxley and the difficulty in taking companies public via the traditional route. It's more difficult today, more regulation, which in some respects is a good thing. But for financiers, if there's an easier route and they can raise capital, they'll take that route most of the time. The time This time, many people have said it is different. These are, for me, famous last words. The bull argument here is that there are higher quality people behind these ventures that there were in the past. In the past, only people that could not raise capital through the traditional route used SPACs. So often lower quality individuals, or at least higher risk individuals, were behind these SPACs. And they're saying today, the bull case says that is not the case. Today, it's high quality people behind many of these. Maybe some of them, but not all. Now, our advice would be each deal should be looked at on its own merits. Do not pile into a SPAC because it is a SPAC. If I say SPAC one more time, I'm going to shoot myself here. But anyways, historically, on average, SPACs, boom, have underperformed traditional IPOs. And the better performance this year over the past 2 years appears to be driven by a few really high profile names, which we would argue are trading at astronomically inflated numbers based on their current cash flow. Now, perhaps the numbers will look better with SPACs this time 5 years out. There are some good companies that have come to the market via SPACs in 2020. But again, we always stress this. A good company does not mean they're trading at a good or an effective investment price. I don't believe the success rate that we've seen in 2020 with these SPACs in terms of looking at the valuations over the long term is sustainable. And that is why I believe at some point during this year, you're going to see a deflation or a severe drop in some of the prices of these SPACs on average. There's some companies in this sector, maybe in the electric vehicle space, that literally have zero revenues. There's speculation. It's a hot segment, but they have 20 and 10 and $5 billion market caps with no revenues and a promise of future revenues. That is not a recipe for success in the market over the long term. There are some unicorns that do well, but if you, on average, make your portfolio based on companies that are always based on the future and future revenues, and they have no revenues now or little cash flow right now, it's not a recipe for success over the long term.
And I think the key takeaway from your talk there
is I love the word SPAC.
Is that you love the word SPAC? Yes. No, but yes, of course. But the next takeaway would be it regardless of whether you're talking about an IPO, an existing stock, a SPAC, capital pool, a Big Mac. No, regardless what you're talking about, it's not. It comes down to the business that you're investing in. You have to understand the business. Yeah. The whole idea of get on this the big SPAC boom is really it's
silly because the SPAC is just a structure.
Yeah, look at the underlying business, the risks and the opportunities, and we, of course, invest only in companies that are actually making money, that have validated a business model. And it sounds to me like that's not what you would be getting generally with SPACs. Maybe one that is already
some of the businesses that SPACs are buying do have a business with operational, good operations, and some of them are profitable. The problem is when you get an overinflated, it's not even an asset class, but it's a way of going public. But when we associate that with returns that always go up, 90% of the companies or something, and as
people
SPACs,
hear about one or two great SPACs that went up and made people their buddies a lot of money, and then they're like, oh, you got to get into SPACs.
Irrational exuberance. That's what you have. So you get a good company, but you have it priced at 200, 300 times cash flow or 400 times cash flow, and it has to keep growing at 50 or 100% every year just to backfill all of that valuation that you're getting right now. Once in a while it can work out, but over the long term it is very difficult to grow your business at 50 at 100% year after year after year. You're not buying it at an effective price many times when you see exuberance for I can't call it a sector, it's just a way of going public, but people are lumping SPACs in together, and you may have a high quality SPAC, but that just means that many people will go to the SPAC route that you probably don't want to put your capital with, and because it'll be an easy way to raise capital, and it has been easier to raise it that way. They become more popular. You get the charlatans in there, to put it frankly right now, and I likely would see that at the start of this year, going into this year, and then going forward at some point that doesn't end well.
Good.
So let's get to another prediction. We're going to circle back to Aaron.
Okay, so prediction number 2 is that the Bitcoin bubble will start to pop in 2021. So Bitcoin, largest cryptocurrency in the world, the original crypto that everybody started investing in, absolutely exponential growth over the past 6 months. So trading now today well beyond its previous high that was achieved at the end of 2017. Almost $40,000 US per coin. 6 months ago, just in the summer, it was only at about 10,000. So phenomenal growth in Bitcoin. I somewhat understand some of the rationale towards money gravitating to non-traditional assets like Bitcoin. Once again, we're in an environment of low interest rates, a very aggressive monetary policy that expands the supply of money or fiat currency, which essentially devalues it if it expands too quickly, if it expands faster than the rate of growth in the products and services that you can buy with it. So options like Bitcoin, like gold, are seen as alternatives to essentially holding cash. Now, I'm not going to make an argument here as to whether or not cryptocurrencies have a future. I actually can certainly see a future that involves cryptocurrencies as potentially even important or just a somewhat marginal part of the money supply. It really depends on a lot of different factors. But one thing that when I look at Bitcoin that I don't like about it with respect to actually seeing it as a source of money is essentially the way that the technology works. You have a private key, which is essentially like a password that you need to use in order to access your Bitcoin and use it. That's the way that Bitcoin is structured. If you lose that private key, if it is stolen, if your hard drive dies, if it's on a USB that you lose, there is no way for you to access your Bitcoin. Now compare that to our existing monetary system, right? Like I'm a banking client at RBC. If I lose my password for RBC, which I do on a regular basis, I call up RBC, they get me a new password, no problem. Or I go into the branch. There's no possibility that I lose access to all of my capital. So this to me is a major technological, I would say, problem with Bitcoin, but the reality is it's actually a feature of Bitcoin. So it's not a bug that you can just erase. It's actually or deal with. It's actually a feature of Bitcoin. It's part of what makes it work. But I think that is also going to be an obstacle with respect to
it's time we answer a question on
Bitcoin
your stock
actually becoming
in a little segment we like to call Your Stock,
the monetary system
buy,
globally
sell,
and
or
certainly
hold.
here in Canada, the United States, and the rest of the Western Hemisphere. So that's a major issue. Just really quickly, I remember hearing a story from Wired magazine when the Bitcoin, first came on the market. They bought a bunch of Bitcoins for pennies because they just wanted to learn about it so that they could write a report on it. Then they decided, having Bitcoin kind of impacts our journalistic integrity, so we don't want to be biased. So they decided to destroy the keys when Bitcoin was the private keys, the passwords, when Bitcoin was worth, almost nothing. Then years later, the price of Bitcoin absolutely goes parabolic. And they're thinking like, well, this is now millions and millions of dollars in Bitcoin, but we don't have the private keys. So their Bitcoin is still there. They can see it. It's still there, but they don't have the private keys to access it. They did whatever they could to find out if there is a way that those keys could be recovered, recreated, so that they could access those many millions of dollars. I don't have the exact figure, but it was a lot of money. And they came to the conclusion that it was impossible. So this is Wired magazine. They have access to a lot of, technological people that should have been able to help them solve that problem. And that just shows that there's an issue here when it comes to the technological feasibility, how normal people could use Bitcoin. Of course, I'm not going to keep going on with this, but of course, one solution to the problem is that you have Bitcoin exchanges, which kind of work like a bank. But then once again, they would hold your private keys and you'd be able to access it, through this exchange, which is somewhat like a bank, the way you would access your money through a bank. But then you're essentially defeating the entire purpose of cryptocurrency, which is to decentralize the control of the currency. You're now centralizing the control of the currency. It's an attack vector. These exchanges have been hacked. There was one story a couple years ago where the owner of one of the exchanges had all of the keys in a laptop that was in a briefcase that was handcuffed to his wrist. He ended up dying of a heart attack or something. I can't remember. And anyways, all of those keys were lost, hundreds of millions of dollars lost.
I remember hearing about that story.
Yeah, so there's a lot of problems to figure out. And I just don't think that Bitcoin's there. So that's my prediction. At some point in 2021, we're going to see, at least a 30% decline in the price from current levels.
Yeah, I mean, I think, it's not that, like, we make our real predictions, to be honest. I'm going to step back for a second, make our real predictions every year and every day based on our recommendations to our clients via our stocks. That's our real recommendations or predictions for the year. I mean, we thought we'd come together and do some topical predictions today. Bitcoin, whether it goes higher or lower this year or 5 years from now, Aaron went through a great case for Bitcoin there, either way on it. I mean, there's some arguments that can be made of scarcity around it because there's only 21 million Bitcoins that can be mined. However, as I understand too, Aaron, you can talk to this as well, that Bitcoin's protocol can or may potentially be possible to be changed to allow for a larger supply, as far as I understand.
I believe so. Listen, I'm not like the technical expert on Bitcoin.
No.
The way that I understand that it works, there is a small group of developers that are seen by the Bitcoin community as essentially the ones that are leading the development of Bitcoin, so they can make modifications to it. The problem is that they don't make those modifications. It's not their choice. They can make those modifications, but then it's the decision of the Bitcoin community whether or not they're going to follow those new protocols. So if they put in new protocols or features that the Bitcoin community or half the Bitcoin community doesn't like, you could basically then you split it in half and you now have two different cryptocurrencies. That's the way I understand it. It's kind of like, they're the leaders of a big parade marching down the street, and the marchers in the parade will follow them only if they think that they think the leaders are going in the right direction. So the leaders can decide to take a turn. But if the people in the parade don't want to follow, they can then just start, going any direction they want. So that's the way I understand how it works. Once again, I'm the guy you talk to about investing in individual stocks, not about the technical. Yeah, I mean,
and that's our thing. Like, if the reason we don't make any recommendations on Bitcoin is because we can't value it. If we can't look at an underlying cash flow from a business or an asset, then we cannot value that asset. Thus, we don't want to put out any recommendation on it. If you want to look at Bitcoin as safe haven, if you want to look at it because you believe there's going to be tons of inflation and it's a digital hard asset, and Brennan will talk about that in a second, I believe. Yeah. Potentially that makes sense as a small part of your portfolio, but overall, for us, if we can't value it, we're not going to make a recommendation on it really either way.
Exactly. And I think there was like that really good quote by, I believe it was Warren Buffett, who was saying, if you buy Bitcoin, you're literally just betting that the next person in line is going to pay more.
Exactly.
Because again, there's no real value to it. And as I am going to be going into my prediction
utility other than maybe a store of value, but I mean, that's just not really, it's not creating anything.
Exactly.
But it's I would question even the store of value. I mean, right now the value looks great, but
I'm saying that's the argument. I don't believe.
No, I think that you don't have to believe
in
that is what it is.
I know. That is it, and that's what I believe. No, and the crazy thing is, on both sides, there's people that are just absolutely dogmatically, you cannot change their view. Bitcoin, cryptocurrencies are the greatest thing ever, and you're silly if you don't think they are. On the other side, too, as with many things in our society today, completely against it, think it's the most ridiculous thing ever, and it's an absolute Ponzi scheme. So you have these two extremes on either side. For us, if we can't value it, it's not good for our clients to make a recommendation on it. If we can value it and understand the business, understand the asset, where the cash flow comes from, that is how we have success over the long term. Stepping outside of that is not a smart thing in investing.
And if you think it's a currency, well, we don't invest in currencies. We invest in businesses. So
Yeah,
certainly
exactly.
we're open to looking at Bitcoin, crypto companies that service that sector in any way as potential recommendations. And we do, and we have. So far, we have not found anything that passes our profitability criteria, but we're always looking.
Exactly.
Yeah, I mean, it's the same with the cannabis space. I mean, as soon as we found profitability, we had some very profitable recommendations now in the space, but it took some time to get to that. Now, Brennan, do you want to go with your second prediction there?
Yeah, so I'm going to continue on with Bitcoin. And again, like Ryan was saying, this isn't investment advice. We cannot value Bitcoin. We have no idea. We're equity analysts. This is a currency, essentially. So keep that in mind as I am on the long side of Bitcoin. So my prediction here is that Bitcoin will not replace gold as a safe haven investment in the near term, but will continue to have strength into the end of 2021. Again, not a buy recommendation. Okay, so Bitcoin has been on an absolute tear in the recent months, reaching and now surpassing all-time highs that were made back in late 2017, right before the crypto bubble burst. But this time, I believe the rally isn't so much fueled by extreme speculation, but rather endorsements from Wall Street. Well, I guess you could still make the argument that it's being fueled by some speculation here. But again, Wall Street is backing it. With the largest asset management firm in the world, BlackRock, stating that the cryptocurrency could one day replace gold as a go-to safe haven investment. And the reason being is because it's more functional than passing a bar of gold around. Well, I would argue that you don't have to pass a bar of gold around to invest in it. Anyways, another firm also said this, JP Morgan, and they recently placed a long-term price target on the virtual asset of $146,000 US per one coin. Now, I have no idea how they came to that.
Can I just stop you for one second? How did they get to 146? Why not 147?
Exactly.
Why not 145? I really want to know that. I really want to see the analysis behind that.
Yes.
Why not 147.2?
And unfortunately, it was just, a nice headline that they made on an article. So continuing here, first things first, I want to... I want to look and see, is Bitcoin really, a safe haven asset and how it stacks up to gold here. So looking at how Bitcoin and the S&P 500 relate, as well as Bitcoin and gold, we can look at the correlations between these assets. Now, just to remind listeners, a correlation of 1 between two assets means that the prices of those assets move in perfect unison. A negative correlation means that the prices move in the opposite direction, and a correlation of 0 between two assets means that there is no relationship between them. So keeping this in mind, CoinDesk research shows that over the past 90 days, Bitcoin had approximately a 0.25 correlation with the S&P 500. So a pretty low relationship and almost no relationship with the market here. And Bitcoin and gold had a correlation of about 0.4. So we can see here that there's little relationship between Bitcoin and the S&P 500, while a stronger relationship between Bitcoin and gold. So Bitcoin is certainly behaving somewhat similar to gold. But now, I personally have some skepticism around Bitcoin surpassing gold as a safe haven asset, and this is why. So number one here is that there is still demand for tangible gold beyond use as a currency. So I just need to find the source here. So the World Gold Council, as well as Thomson Reuters, estimate that 54% of all gold in the world is used in jewelry. So, people are actually wearing gold. There's demand for people putting it on their bodies, as well as about 10% of gold is used in technology. Many people don't know, but all of our phones have a little bit of gold in them. And then, of course, like Bitcoin, gold can be used as an investment or currency in the barter system. So my second point here, where I think that Bitcoin will not surpass gold as a safe haven asset, is it's still very volatile, which is not exactly a characteristic an investor wants in a safe haven asset. or currency, with annualized volatility for Bitcoin of 62%, whereas gold is about 23%. And gold actually just came off of a really hot year, so I believe that this would be lower in a normal year. Now, Bitcoin's volatility may decrease over time, but I do not believe that this will happen anytime in the near future, just because there's so much speculation behind it. So now my prediction for Bitcoin is that in the near term, it will not replace gold as a go-to safe haven investment. And I would even say, even over the long term, I don't believe that it'll surpass it as a safe haven asset. But because of the argument behind scarcity, the continual printing of money that the world economies are doing around the world, I believe that Bitcoin will have a strong year in 2021. Again, not a buy recommendation, but I do not believe that it will falter below its 2017 highs through the end of the year and end up somewhere between $40,000 to $50,000 US per one Bitcoin.
So you're thinking between 0 and about 25% return.
Yeah. Again, not a buy recommendation. I need to make sure.
Yeah, I'll tell you anecdotally. Twice at the start of this year, I've had people come to me that had got recommendations from their financial advisors from two of the big banks in Canada. That had recommended them putting between 1 and 4 or 5% of their portfolio in cryptocurrency or Bitcoin, and so that's increased demand at the start of the year. It can, that could be driving what's going on if that recommendation is going out there right now. Not exactly driving what's going on. That could be contributing to the positive segment there if some of the larger asset managers in the country are now looking to put 1 to 5% of your portfolio. I would suggest if they really did believe in Bitcoin, why put 1% of your portfolio in it? I mean, it just really is meaningless, even if the crypto doubles, you add 1% in terms of returns. But that really just jives with the way that the traditional asset managers in Canada build your portfolio. It's 1 or 2% in each asset, and they're just going to try to get what the market does, charge you that fee, and underperform, which is what we talk about in our seminars, our DIY seminars all the time. But anyways, that's an aside. I've seen anecdotally a couple times this year for the first time, some of the larger asset managers potentially adding Bitcoin as an option within just your average Canadian portfolio. So I'm going to look at my second prediction here. It's on cannabis. It has two parts, the cannabis segment. I'm going to say A would be continued consolidation and some opportunities in the U.S. market due to favorable regulation environment and positive investment sentiment there overall. B would be consolidation in Canada, in the Canadian cannabis market. There should be some share rollbacks or consolidations this year and further pain in many names. But I believe there'll be a couple winners that start to emerge. Whether that happens at the start of the year, by the end of the year, I'm not sure, but there will be some winners. I'm going to comment quickly because we just went through all 3,500 companies in Canada. There's almost 200 Canadian cannabis stocks. Some of them are doing business only in the U.S. Many of them are here in Canada. Generally, I would say the capital structures of the Canadian stocks are terrible. Most of them have too many shares outstanding and too much dilution in terms of options and convertible debentures. We see some good growth there, but I do understand it was at certain points difficult to raise capital in the segment. So it has led to this structure. But on the flip side, there's been other times over the past 3 years that it's been downright easy to raise capital in the cannabis sector. So there's really little excuse for the frivolous issuance of shares and options for capex and acquisitions that most companies in the segment have been known for. In many cases, we saw initial finance teams basically that were behind these companies that were in the game, they call it, to line their pockets with little regard for creating strong financial structures to enrich shareholders long term. We do see some Canadian companies now that maybe have some better operators in them, and that's what we're looking at. Now, many U.S.-based and Canadian-listed companies continue to share this pattern, though. There are some notable exceptions, though, in the U.S. market. For example, with our top pick over the past year in the sector, TrueLeave, which has jumped now over 200% for our clients in just over a year. And again, like I said, we've been recently looking at a few other U.S. names and a few Canadian names that are breaking into profitability. Most are highly valued, but there may be a couple opportunities that appear in 2021. We still think the U.S., there's some pricier names definitely right now, but there's some upside in some good companies there.
Yeah, and of course, one of the challenges, there's no better way, I'll just say, of getting a sense of what's going on in the market than just starting at the A's and going through every single company. That really gives you a sense of,
it really is. And
where's the revenue going? Where's the profit going? What are the valuations? Yeah.
You get a good idea of the balance sheets, what's happening, are the strict producers, are they integrated companies, like for any sector, but I'm talking specifically for the cannabis sector now. You get a really good idea where it's going. And when you do that, and we just completed that, you come up with a few names that stand out on the negative side, also a few names that potentially can stand out on the positive side. So we should have some, it also confirms the companies, the couple recommendations that we currently have. It continues to confirm that they're, leaders in the segment, and is why we've seen tremendous returns in them over the past year. And I think we picked an opportune time to start getting involved and actually buy companies in that segment. So do we have another prediction from Aaron? Do you have another bold prediction?
I do. I have one final prediction.
Okay.
I'm actually very excited about this one. I'll just go through it.
We're on our pins and needles right now.
I'll just go through it and my analysis of it really quickly. This prediction, I'm predicting that Brennan is going to lose at least 75% of his stock debates on the podcast in 2021. Let's look at the numbers here. How do I break this down? Well, the way I see it, I'm more than likely going to be judging 50% of Brennan's stock debates. I'll be the judge. He'll be debating against you. So there, 50%.
That'll be against me. And let me just say, he'll be against me. So come on.
Whoa. Well, I think I'm thinking it had more to do with me being the judge, but
and that I'm lining your pockets ahead of it.
Whoa! Highest bidder here.
Yeah.
So with the other 50%, he'll be debating against me. I only need to win half of those, just over half of those, and then my prediction becomes true. And Brennan's loss rate for the year is over 75%. If I win over half of my battles with him, and I think I can do a lot better. I think that with some work we can get Brennan's loss rate up to 85 to 95% this year.
Oh, I love it.
And I'm excited
I'm willing to work on that with you.
I'm extremely excited.
On that.
Loss rate. Well, I hope for my sake that that prediction doesn't come true. And we'll talk off air, Aaron, to talk some numbers.
Brennan's going to try and intimidate me.
Do you have a third prediction? I like that prediction. I'll go with that one. Do you have a third prediction, Brennan?
Yeah, my last prediction is just that by the end of 2021, I do think that the pandemic will be in the end of sight, or the end of the pandemic is in sight, sorry. And that I'll, be anticipating to leave my apartment. And I just think that because the vaccine rollout is currently underway, and in the next few months, we should see more companies like Johnson & Johnson add their own vaccine to the worldwide rollout and distribution. I think that somewhere at the end of 2021, things are going to look bright, and we're going to go into 2022 very happy. And I'm going to consider leaving my apartment.
The craziest part about that is you actually considering leaving your apartment in the best of times. So,
yes.
Yeah. Well, what can you do? Considered doesn't mean it's actually going to happen.
It's true. It's true.
Yeah, I would agree with that prediction. Actually, assuming the vaccines work as expected, I believe that the idea was that by the fall, the vaccine would be already. You would think that millions in Canada would have received it. But that it will be available in the fall for anybody who wants it.
Yes.
Whether you're high risk or
Yeah,
not.
it would certainly be nice to get back to some semblance of normalcy. It would be awesome. So I can get behind that. Can I go to my third prediction?
You bet.
So in the second half of 2021, a strange phenomena will occur in Canadian corporate earnings. Many companies will report higher revenues as the economy opens up further from the COVID lockdown, but profits will dip as CEWS, or Canadian Emergency Wage Programs, will finally end. A figure will become known. It'll be EBITDA will suddenly become EBIT. And I stress the duh part at the end. The new figure will be called earnings before interest, taxes, depreciation, amortization, and unrealized handout 1, handout 2, and handout 3. Most analysts, however, will somehow buy into this. The biggest impediment, though, to this prediction actually coming true is that it relies on the assumption that in Canada, handouts will end, as Trudeau seems to love just shoveling out newly minted Canadian dollars for votes. And many of his supporters, including younger Canadians, who are the ones who will be most hurt by the massive debt increase that this has caused, appear to blissfully support his unlimited funding. Any thoughts on that?
I think it's great. I think it brings up a really interesting point, and that's that a lot of companies that have been reporting over the last couple of quarters have reported higher profitability margins because they've been getting those government subsidies. I can't remember, what is it? The wage subsidy.
CEWS,
exactly.
Canadian Emergency Wage Subsidy.
It's there, but they're not. If you dig into the statements, if you dig into the commentary, you can find some mention of it. But a lot of times these companies don't break it out. It's certainly not right at the top of the press release, where they're bringing people's attention to the fact that has been buoying the profitability. But certainly when it goes against them, it'll be right up at the top of the press release and highlighted.
Oh, it will be. It will be. That's why I think we will have the EBIT, and that's what we'll call it there. As an aside, I think we really should do a show on this. But we just went through the statements of thousands of Canadian companies, and there are very curious numbers in there. Like some businesses, you have flat, or they're down in terms of their revenue slightly, or even flat revenues, and the profitability is significantly up. And hidden in there, and it is hidden at times, is the CEWS payment. This is a stat. This is an aside that I found. The Financial Post did some analysis on the 68 companies that received, public companies that received over $1 billion in CEWS. 68 of them, 11 introduced a dividend or hiked existing dividends in the quarters that they received CEWS over the past year. I mean, that is fairly shocking in that, had these companies were subsidized to the tune of $1 billion in total, and they were either introducing a dividend or hiking their existing dividend as they were receiving CEWS payments. That does not seem correct. And it's like I've said a couple times, I initially, the Canadian government could not be both quick and correct with their response given the uncertainty and the gravity of COVID. But by the summer of this past year, the government had a chance to get it right or make the subsidies more appropriate. Instead, they just went on essentially extending it. And we're seeing some strange numbers in some of these companies that you really have to adjust out, and some money that went to some businesses that really did not need it, which is not what that was intended for. But if you hand out that money, and if they qualify for it, the way that companies run, and they have, their shareholders will demand that you take that money essentially, because their competitors will take it and get a leg up on them over the long term. You have to responsibly have those programs issued in an effective manner. And I believe the Canadian government had a chance to do that in the summer, 4 or 6 months in, and it just wasn't done. They love handing out money. So it has to be done responsibly. Everybody loves to get money, but somebody has to pay the piper. The bag gets filled up in terms of debt. And, I feel for our children that we'll have that debt on their backs, and higher taxation, and we could go on and on about that. But Do you have any more predictions, the two of you?
No, I think that. I actually predict that most of our predictions will be.
Yeah, I predict
at least half of
right.
our predictions, let's say, will be wrong. No,
50% will be wrong.
I think
Amazing.
that you made a good point earlier, and that's that. This is really just a thought exercise. It's a little bit of fun, and then we try and actually apply some good analysis and rationale to it. But it's really just about fun. It's we're not here to make macroeconomic predictions. With my prediction of Bitcoin, if somebody has a small allocation to Bitcoin, you don't need to change that necessarily. But if you have 80% of your portfolio in Bitcoin, you might want to listen to what I said. Although, of course, if Bitcoin doubles from here, you'll probably
we'll delete that part of the show.
Yeah, exactly. So it's not about me predicting. It's about it's probabilistic. Like, what do I think is the most likely scenario? Not saying this is going to happen. It's like, what do I think is more likely to happen than not? And when it comes to really big macro predictions, I think that you should expect people to be wrong at least 50% of the time, possibly more.
Now, can I add just a couple right at the end here? My number one prediction here is that the U.S. Supreme Court will issue massive fines for internet giants, Facebook and Google, for privacy and anti-competitive violations during the course of this year, and order the businesses to be split up. It's a bold prediction. But then they will promptly reverse the rulings after the justices find out that both companies have easy access to their browsing histories. So that is my big prediction.
We'll see.
Yes, it's incredibly hilarious. Number two would be Elon Musk will call Tesla 50% overvalued at some point this year. The stock will initially drop, yet it will then proceed to double at some point in 2021 for inexplicable reasons. So those are my two funny predictions, although they fall flat because there's not a big audience listening. But I'm sure everybody at home right now is peeing themselves, right? Brennan,
I'm sure.
You probably have to change your shorts, right? So
yeah, I'll actually.
But those are my two predictions.
Well, I
my
have
biggest
no funny
prediction.
Predictions. All my predictions.
Oh, come on!
Especially the one about.
Well, your Brennan prediction was pretty.
That was
actually
pretty
that
funny.
was very serious.
No, that was only funny. That was only funny.
Yeah, obviously.
But my biggest prediction.
If I have to, be dirty about this, about him, about boosting up his loss rate.
Yeah.
By me being the judge.
I would say that just my advice and prediction right now, this is what we would give at all time. I think that valuations in the market generally are higher at the higher end. If you're nervous about entering the market right now or building your portfolio, again, using our structure that we talk about in our DIY portfolio seminars all the time, it's a 15 to 25 stock portfolio built over a 12 to 24 month period. If there is a correction at some time this year and you make 2021 the year you're starting to build that portfolio, and 5 months in there's a correction, you've probably only bought 5 or 6 of the stocks that you're building your 15-25 stock portfolio. We think that's the best way to structure it. It'll prevent you from buying or crystallizing your entry point at one point. You're buying quality businesses that you want to own for 2 to 5 to 10 years. So over the long term, we think those businesses will perform well, regardless of where we are in the current market cycle right now. That would be my biggest piece of advice going into this year, how you structure your portfolio. Make sure the composition is there, building over a 12 to 24 month period, and the what you put in it is the composition. Sorry, that is the most important part of your portfolio in terms of the quality of businesses at reasonable prices that you put in your portfolio. And that's what we're going to talk about with our clients all year, and anybody who wants to become a client. We had a great year last year. We expect to continue to employ the same type of research that we did over the course of the last year. I hope everybody enjoyed our predictions show. We'll reconvene sometime in December and see how we did on those predictions. If, of course, that's only if they look good. But no, we'll reconvene and definitely talk about those predictions in December of next year. So quickly before the end of our podcast, let's get to Nuvo. Or now it has a new name. What's the new name there, Brendan?
Miravo Healthcare.
Yeah. Quit calling it Nuvo. It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Yeah, so I'll take it away here. So it was Nuvo Pharmaceuticals. Now it's Miravo Healthcare as of December 18th, and the ticker symbol is MRV on the TSX. So it's currently trading at a price of around $1.06 and has a market cap of about 10.4 million. And the question came in from Andrew via Facebook. Well, Andrew, as Ryan was saying earlier in the podcast, we actually just completed a clean sweep through every publicly traded company in Canada. And Miravo was actually a stock that I came across, and I can say that it initially screened well, with my preliminary analyst notes saying that it has good growth, it is profitable, and it has a net debt position. So let's take a look at the company. Now, Miravo Pharmaceuticals is Miravo Healthcare is a Canadian healthcare company with 25 products that target areas including pain, allergy, and dermatology. To name a few products, they include Cambia for pain, Blexten for allergies or rash, and then also Canadian distribution rights to Results, which is for head lice. And then they also have some worldwide rights and royalties from licenses with other drugs. Now, keeping my previous analyst notes in mind, starting from the last quarter, which was Q3 of 2020, Miravo's 12 trailing month revenue growth was about 40%, which is solid. And adjusted earnings per share was around 75 cents per share in the last 12 months, compared to a loss of 94 cents for the same 12 months last year, and as well adjusted EBITDA of approximately 31 million for the last 12 months. So operationally, the company does look positive. Now, Miravo has a net debt position of about 90 million and a net debt to EBITDA multiple of about 2.9 times. So it is getting up there, but not too concerning. And lastly, the stock is trading with an enterprise value to EBITDA multiple of about 3.3 times, which is very attractive if the company can continue to grow. Now, looking at the growth opportunities going forward, one of its primary drugs, Blexten, is gaining market share against its main competitor in the space, which is positive, gaining about 16% of the market since its launch in 2017, and this trend is continuing. As well as Miravo's manufacturing facility is at about 25% capacity, which could support future growth. And the company can still out-license many of its drugs around the world. So there's opportunities there. But if one were to be considering an investment in Miravo, it would be crucial to get an idea and a full, thorough landscape of the licensing deals and for how long these licensing deals are expected to go. But I can say that in their MD&A, they said that they have a pediatric version of Blexten, which if a regulatory decision will be made in mid-2021. So that could also help growth going forward. So now to conclude here, Miravo looks very interesting, although debt might be getting to the higher side of things. The business has shown good revenue growth over the past 12 months, has posted positive adjusted earnings, and trades at a reasonable enterprise value to EBITDA multiple. It's definitely a company that I'll be keeping my eye on and possibly digging into a little further to get a thorough understanding of the business and the drugs that they sell.
Yeah, and this is what we do, continue to look at businesses as they evolve over time. I believe we have a conference call set up with management. We do many of these. Many of them end up with no investment recommendation. But if it continues to grow, if it continues to offer a reasonable price, and we understand the business, the length of time that they have with a patent on those drugs without competition going forward. Those are all the things we look at when we look at a business like this. And if we can understand the debt structure, whether or not that is sustainable over time, those are things that we like to look at. And we'll continue to follow this company and see if it fits our criteria over the long term. I'd like to wish everybody a happy new year. Keep your questions coming in to our Your Stock, Our Take segment, our Ask Us Anything segment, as well as if you want to do a case for, case against, tell us. And if you got two companies from a similar segment to the market you want us to pit against each other, we'd love to do that again this year. It's a segment that got some rave reviews at the end of last year. We're going to continue that. Everybody stay safe out there, and I wish you profitable investing in 2021. Thank you.
Profitable investing.
Happy New Year, and thanks, everyone.